Welcome back to my channel, Value Investors. In this video, I'm going to be covering Tesla. There's another company that needs no introduction. Tesla has revolutionized the car industry by innovating and bringing to market a full electric vehicle, bringing it against all kinds of headwinds and making that a reality. Just my hats off to Elon Musk and everyone at Tesla for accomplishing such a feat. And it's become one of the most prized brands really in the automotive industry, as well as across the board. Just people really respect, appreciate, love Tesla. An example: I have two sons, and a long time ago, he's now 19, but at the time he was probably 7 years old. And we were in San Jose, California on a family trip, shopping, and there was a Tesla store. And this 7 year old, of all the stores, toy stores and so forth, he wanted to go to a Tesla dealership and check it out. He wanted a t-shirt. The 7 year old was a fan of Tesla at that time. And that really shows kind of how special the company is. Now, that's all great and dandy, but I'm a value investor and I need to judge, is this a company worth investing in? I've been a Tesla stockholder in the past, but I currently don't own any shares. The stock has seen a big drop in price, and I wanted to see, is it a good time to buy Tesla stock at this time, or is it still being sold at a premium and I should stay away? I'd like to show you that analysis and then also conclude with what I plan to do with the Tesla stock. There are plenty of videos available on YouTube for Tesla. There's plenty of people that want to review the Tesla stock and voice their opinion for good reason. This is a really interesting company that has had an incredible history. There's also one thing I've noticed is I would say that 2 years ago, Tesla couldn't do wrong. There was people that just believed that Tesla was going to run the world. And I would say that that's fading. I think the big price drop that we've seen over the last year has really pulled back a lot of the over exuberance on Tesla. I think people are more realistic now. They view Tesla as a car company that has awesome technology that can really use the car business as a jumping off point for other solutions that relate to that type of consumer. The Tesla brand is really valuable, but it's interesting to see the variety of opinions that are out there on Tesla. So let me take a look at the fundamentals of Tesla. To begin with, it's a $558 billion company. They were well north of 800 billion at their peak, and they're down about 40% from their peak. Their revenue, they're about a $100 billion company. So that's pretty good, 5 times revenue. But if you compare them to a car company, that's where the metrics don't look very good. You can buy car companies at, 1 time sales, 2 times sales. And again, Tesla is a special company. Forward PE is really high at 55. Man, I cannot stand behind a 55 forward PE because Tesla hasn't been growing all that much. And if you're not growing, you shouldn't have a very high PE. Now looking at analysts, most analysts are holding on the stock. And I think if you saw analyst reports 2 years ago, boy, it was a incredible buy. Everybody should be buying Tesla stock, which is interesting. How stocks are a popularity contest. Which stock can get all the votes, and then once it starts going down, I think a lot of people leave that popularity contest. Now looking at the stock year to date, it is down 30% over the 1 year. You made a almost 180% trip. You saw your investment really go up. I think Tesla was up 180% at some point, and then it came back down to earth. And we'll see where it's going to go. I'm going to value the company based on their free cash flows and their earnings per share, and I'll see where I think the stock price is valued to see if it's a good buy at this time. I'm going to value Tesla looking at their free cash flows and also looking at their earnings per share, starting with free cash flows. In 2023, their cash flows were just under $4.3 billion, and I'm adding a growth rate of 5%. The reason for that is their free cash flows, even though the company's been growing at 27% over the last 3 years, and keep in mind, if you look at last year or 2022 versus 2023, the growth wasn't that high. It wasn't 27%. It actually slowed down quite a bit, which is why a lot of stockholders are leaving Tesla. But their free cash flow actually went down. And the reason for it is car companies, they just have a lot of capital they need to put into their operations, factories, machines, robots, all kinds of stuff that they have to buy and put into the business. It's almost like buying the business over again. So that really makes their cash flow much lower than if you looked at a Google or a Microsoft, which generate just fabulous cash flow. Nonetheless, their free cash flow that I'm going to start with is 4.3 billion, and I'm going to grow it 5% over years 1, 2, 3, 4. And their terminal value is going to be all cash flows beyond year 4 are going to grow at 4%. I think those are realistic numbers. Looking at the value of those cash flows in today's dollars and cents, it's $104.7 billion if I use an 8% weighted average cost of capital. They have a lot of cash on the balance sheet of 29 billion. Very good. Very low debt, 2.3 billion. So a very strong balance sheet. Their debt to EBITDA is really low. It's pretty much zero when you consider net debt. So their equity value is $131 billion. At $131 billion, it would still make Tesla the most valuable car company on the planet. But their current market cap is $558 billion. So that's a big separation between where I think the company is worth based on their free cash flows and the market cap of the company, to the point where it's, I believe, based on cash flows, it's being sold at a premium of 76%. Big separation from the current stock price. Their earnings per share was brought down. Their earnings per share was higher than this previously. I did a video on Tesla about 6 months ago, and you probably saw that the forward PE was, forward earnings per share were closer to $4 per share, but now it's down to $3.14. The car business is tough. Got to compete on price. A lot of companies have caught up to Tesla, and I don't think they'll ever catch them completely, but consumers have really good choices for EVs now, and it's causing the prices of Teslas to go down. It's squeezing the margins, and it's showing up in earnings per share going down. So at $3.14 is what I expect in the current year. I'm going to give them a favorable PE of 36. If you look at Ford, they have a PE of 6, and Ford is growing, and Ford is generating more free cash flow. So 36 is very, very optimistic, but I'm willing to go with that. And I'm going to go with a growth rate of 4% on the earnings per share. So earnings per share would give us a stock price of the company of $96.29, but the current stock price is $175. So it is sold at a premium of 45% if you look at the earnings per share. Combining the two gives me a 66% blended premium on Tesla stock. It is just a very expensive stock, in my opinion. Just one more point on valuations. Comparing Ford to Tesla. Ford is a company that's been around for 100 years, and they really know the car business, and they are not the leaders in the EV market. They're more of an internal combustion company. But if you look at their free cash flows generated, 6.5 billion. And when you compare that to Tesla, 4.3 billion, you look at the market cap of Ford, 46 billion, versus market cap of Tesla is almost 10 times higher. Ford generates more cash. That's cash that goes in the bank account, cash that goes in your pocket, cash for dividends, cash for buybacks. It's higher. So that's amazing. The earnings per share is not that far different. $1.71 per share versus $3.14. And I say it's not that far different because you could buy a share of Ford stock at $12 where you'd have to pay more than 10 times the share price for Tesla. And I think that's the big, realization for stockholders is if Tesla's a car company, they're grossly overpriced. If they're a technology company, you could substantiate their share price. I happen to believe that Tesla is a car company, and it's the problems and the challenges they have today are really showing up as a car company. They're struggling to keep their prices up, and that's because EVs have entered the market in China, especially, and it's really putting downward price pressure on Tesla vehicles. The recalls, we've seen a lot of recalls on Tesla vehicles. Those are expensive. Those are unforeseen. And the old car companies are really accustomed to those. They're probably better at dealing with recalls and dealing with quality than Tesla because Tesla's newer. So those are the things that I look at. I was a Tesla stockholder a long time ago when they were in growth mode, but I'm currently not a stockholder because when I see these numbers, I can't enter a stock when the numbers are telling me this story, and it's just as a value investor, it is too high of a premium to pay for a great company. In summary, the Tesla company is really interesting. It's a business that I would definitely want to be an owner because of their innovation. I think the industry's good, especially since we're really moving from internal combustion to electric vehicles. The autonomous driving is really interesting. Those are things that are interesting to me. And I think the management team of Tesla is really good, especially Elon Musk. Their debt is well under control. They pretty much have no debt because they have so much cash on the balance sheet. But as mentioned, there's just nowhere near a discount nor a fair price on a great company for Tesla. Therefore, I'm a seller of Tesla. I wouldn't own the stock. I think it'll be a long time before I even think it's a good investment. And I think because they'll continue to be fans of Tesla, similar to my son, who at 7 years old was a fan of Tesla. I'm a fan of Tesla. I think they're cool cars, but I invest in stocks to make money. I don't invest in stocks to have the pride of owning a particular stock and having it in my portfolio for an emotional value. No, I'm a dollars and cents guy. I like owning stocks that make a lot of money, generate a lot of free cash flow, and they return that cash flow in the form of dividends, stock buybacks. You see a stock appreciate like a Meta, like an Airbnb, just great cash flow generating machines that drive up a stock price. Thank you for watching the video. I hope you found it interesting. I'd love to hear your comments on Tesla. Tell me what you think of the company, where you value the company, and what you plan to do with the stock. I'd really appreciate that. Good luck investing in 2024.